This is Alan Bush with ADMIS. In the stock index futures, seeing a lot of pressure developing this morning. In fact, we are now seeing the S&P 500 futures at a 7-week low. All of this weakness that we are seeing is basically linked to earnings reports that have come in weaker than the analysts have expected, both in earnings and also in revenues. We continue to believe that the bullish influence of the third quantitative easing plan from the Fed will not outweigh the negative impact of all these weak earnings reports that we've seen, especially over the last couple of days. So with futures sharply lower now, I think we can see some continued weakness. We have some support coming in at 1400 in the S&P futures. That will probably hold temporarily, but I would not expect that to hold longer term. It looks like we are going to see lower prices for stock index futures. Over in the foreign currencies, seeing the euro currency sharply lower as well. We do have some negative news from the eurozone. For one thing, Moody's downgraded the ratings for 5 regions of Spain. We had Spain's GDP coming in down 0.4% in the third quarter, and that's the 5th consecutive quarterly decline in GDP. Also, we're seeing the Canadian dollar gaining on the Australian dollar. Looks like the Bank of Canada still may raise rates next year, at least that's the consensus view. So from an interest rate differential point of view, the Canadian starting to gain on the Australian dollar. Our feeling is, though, that come next year, the Bank of Canada will not be raising rates, and I believe this is very much a minority view. In fact, I think I'm the only analyst predicting no rate increase and possibly a rate cut by the fourth quarter of next year. In any event, expect the Canadian to continue to gain on the Australian dollar. In the credit markets, futures higher for a variety of reasons. For one, lower commodity prices are bullish for the credit markets. Lower stock index futures prices also supportive. Plus, we do have the fiscal cliff coming into play. That also would be supportive to the credit markets. So from here, even though futures are higher, I think we'll see further gains today, and I think we can see further gains longer term in the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
Are they starting to ramp up and maybe have to add workers later? What's happening